welcome everyone. So today is Sunday, March 17th, and so we are using Discord. This is going to be recorded again, and so hopefully you guys can see my screen. You should see the our Robinhood stock market watch list page, and so if you're if you're kind of new to the group, because we've received just thousands of new members, that which typically happens when there's a lot of activity, whether it be crypto, stocks, or whatnot. But there's a lot of stuff that we save under our featured and announcements area on the top of the page, and so that's just really important, because we're always uploading a lot of material on there. But one of the important things as we do our due diligence for the week is to always try to focus on things that'll provide the most volatility and then work our way down. And if you haven't noticed already, what provides the most volatility in the entire stock market, and if you haven't found that answer, you'll notice that it's pretty much economic reports. So you'll notice that all of a sudden this particular news comes out, all of a sudden the stock market surges straight up or it plunges straight down, and almost every single stock does it. And all of a sudden you start getting these news reports about certain economic reports and whatnot. Well, these things are scheduled. They are scheduled to happen, so we can know when these reports are going to happen and how it may affect the entire stock market system. And so the best website that we use for that is a website and an application called investing.com. And so if you find the economic calendar, there's just a few things that we need to filter, because there's only a couple things that we need to see, and that is the United States. So we put a check mark under the United States, and then you'll see importance. You'll see a 1 star, 2 stars, and a 3 stars. We want to put a check mark under 3 stars because we want to tell this website that we want to pull everything that'll have the biggest impact on the United States stock market. So once you apply those, then we'll just try to pull up the scheduled week of the economic reports, and we'll notice that we have a lot scheduled for Wednesday and Thursday. So obviously these days are going to be the most volatile days of the entire week. So be prepared and to plan our trades, because if we fail to plan, we're planning to fail, and that's not us. And so, but notice that there's nothing scheduled for Monday and a Tuesday. And so, and typically that's normal. We don't normally see anything scheduled for a Monday or Friday. Normally it's a Tuesday, Wednesday, and a Thursday. But it looks like they kind of crammed, a lot of stuff into just 2 days. So, just be prepared for a lot of volatility these days. And so so starting with the top one, so we have Wednesday, March 20th. So the first one, which is the crude oil inventories, which is scheduled to be released at 10:30. And when we're looking at this on the website, it's going to default it to the Eastern time zone. So depending on where you're located in your time zone, you just have to try to plan accordingly. However, if you're looking at it on your mobile phone, it will automatically calculate the time based on your time zone. So that way it's more towards where you're located. So, but it's important to know whether these reports are going to be released before or after the stock market opens. So in this case, if Eastern time zone, the stock market opens at 9:30, this report is scheduled to be released 1 hour after the stock market opens. And so normally we can see a forecast, and the forecast information will help provide us an idea of whether it's going to provide bullish characteristics or bearish characteristics. And so in this case, it doesn't really provide us enough information to determine that. However, once we get more into Monday morning, maybe during pre-market, they may populate that information on here. However, these, which are government meetings, so these are going to provide a massive amount of volatility because of uncertainty. And anytime when there's uncertainty, typically, investors sell because they want to wait and see what happens after, the results. And so, however, we have the federal interest rate hike decision, not a hike, but just an interest rate decision. And the forecast is predicted it's going to stay the same. They're not going to change anything because most likely the government's going to say, "Oh, we're not quite there to our goal yet," or whatever it is, 2.5, for the inflation. And so, I think the last one was like 2.7, 2.8. So where it's like we're almost there. It seems like we almost need one more, maybe a couple months or something like that. And so, but we're getting close. However, there is, I believe, 6 more interest rate meetings this year. So if we click on it, it'll actually provide us that information. So if we scroll towards the bottom here, this is kind of where we're at right here. We're at March 20th. So they're not forecast for anything to change. However, we still have 1, 2, 3, 4, 5, 6 more interest rate meetings before the end of this year. And so that just helps provide more volatility, more opportunities, but eventually they will begin to start lowering interest rates. It could be, a very small amount, maybe it could be a large amount, who knows, but it is scheduled to for something to happen. And so, but we can definitely count on volatility. And so, which is always a great thing, especially if you're in a straddling. It doesn't matter which direction the stock market moves, as long as it picks a direction. Straddling can be a very, very profitable strategy in this type of situation. And so, but a lot of people are predicting that that this decision, or as well as the day, will provide bearish characteristics. So, but I believe it's just going to provide volatility. We're going to see it just kind of just probably plunge down, and it's going to recover. And so,
I have to agree with you there, Carlos.
Do you? Okay.
And I do want to say one thing. You showed me that investing.com about a year ago, and I still use that to this day. I always check in the beginning of the week. So, guys, if you haven't already, make sure you pop that up on your favorites. Make sure you're using investing.com and go through and click US and click on the 3 stars in importance, because that's what's going to create the most volatile parts in the market. And using technical analysis like I always do, this is very, very key into knowing what's going to actually happen in the stock market. So make sure you save that. And I also have to agree with you. I don't think we're going to see a huge change in the market with this Fed rate decision March 20th at 2 o'clock, because it's expected to be the same. It probably will be, but you're absolutely right. I think we're going to see a crazy amount of volatility to come in.
Yeah, and you've noticed, even with the year you've been using that, this forecast is always spot on. I've never seen it wrong. And so, so we just have to follow that. And so, but once that forecast does change, then that could mean a lot. That can mean that the economy may actually change or shift, because what happens is there's a lot of people that are waiting for that to happen. A lot of people with great credit, that want lower interest rates. Maybe they have this car that they've had for the last several years with low interest rates. Well, these people are going to come out of the woodwork, and then they're going to start buying. And there's still a little bit of a shortage, especially for automobiles. We had a worker strike, from the worker union and everything. So there's not a lot of new vehicles that are being built. So the used inventory is kind of recycling itself in a way, and there's becoming less and less out there. So what we're seeing is kind of another low supply, kind of a high demand situation that's kind of brewing. And when we see that, we see inflation, and that's why this whole lowering interest rate thing has to be done very, very carefully. Even though a lot of people would love to see that, but it's still a very, very dangerous thing for the economy. And so that could we just got to be really careful. And so
Well, can you just imagine if they came out and they did raise an interest rate? Like that's where we have to be the most careful, and that's why we should tune into these press conferences or these rate decisions at 2 o'clock. Which shameless plug, I will be doing a live stream. I will post it in the Robinhood Stock Market Watchlist, of course, so that way we can further dedicate myself and my YouTube channel to the Robinhood Stock Market Watchlist, so that way we can keep an eye on this. And the whole reason for this, guys, is because if they do come out with a rate hike, raise even a quarter of a percentage, you're going to watch the stock market absolutely plummet. It's going to scare the heck out of everybody. And same thing is if they raise the interest rate a quarter of a percent. Now, if they lower it a quarter of a percent, you're going to see an unprecedented amount of volatility coming to the upside in the overall stock market. And that's why we have to pay attention. We have to know when and where these are taking place. So make sure you mark your calendars for March 20th at 2 o'clock Eastern, or 2 o'clock market time, I should say, because this could get very, very volatile, especially if there's a change in the actual forecast.
Oh, definitely, because these things can easily change or populate if there isn't anything there, and that's why it's important that we look at this every weekend as well as every day, because things could get added and changes. So, but yeah, it just really helps our due diligence, as well as our charting, as well as with all the
Yes,
schedules,
sir.
and talking about the calendar. There's several different ones, like this economic calendar, but also there's a very important trading calendar that I always recommend from NASDAQ. This is a PDF file. I'll also post in our group, in our chat rooms. That way you can have access to it. But it's really, really important. It kind of has all the holidays and option information indexes on the bottom, kind of like your legend, and that way it kind of color codes it within the calendars. That way you always know what's going to happen before it happens. What days, especially what days are closed, or what days are a partial day, where things will close early, or triple witching days, like we just had last Friday. And so that's why it's so important to always know what's going to happen before it happens, as best as we can. Now, going into Thursday, March 21st, we have some economic reports that are scheduled to be released 1 hour before the stock market opens. And the first one is the initial jobless claims. This is a weekly report for unemployment, which the previous report, which was just amazingly low at 209,000. Now, before COVID and everything, this was normally about 300,000 people. So it's just really, really odd that it's just really, really low. But it also just kind of shows that there's almost more like jobs than people. I mean, we which in the past we've always kind of predicted a population shortage, and that's probably one of the reasons why the borders are kind of more open for several different reasons, to help populate the country with more people, and as well as helping the economy, but also there's a lot of speculations for more voters to help vote, but also a lot of people haven't ever mentioned this, that if you look in the past, during civil wars and revolutionary wars, our borders were also open, and we told a lot of people, hey, you can come into the United States, but you got to fight in our wars. And so it's very interesting with this time of a lot of the world animosity, that we could be trying to get people in here to help fight if we are ever invaded. And so So talking about this, so Putin just, I don't know if you guys saw my video and post that I posted throughout the weekend, but Putin just made a threat to the United States through an animated video showing what basically Russia would do once they initiated an attack on the United States, and how they would do it. And it showed this missile go up in the air, and it started to, turn into all these other little missiles and started hitting all these other key points throughout the United States. And so then all of a sudden, cryptocurrency just plunged like crazy. So it was a very interesting coincidence, but that's the only reason I was able to, or the only really evidence I was able to find that could that created this huge effect on the entire cryptocurrency system. Now, if it does that on the cryptocurrency system, I also anticipate that we'll see a very bearish effect on Monday morning. So just be prepared that we could see a massive plunge during pre-market Monday morning. But typically, when Russia or North Korea says something like this or does something, it does spook the market and investors and whatnot. But then, nothing happens and things go back to normal very quickly. And it could be the same day. So even though, if the market plunges on Monday morning, it could easily begin to recover, within the first hour of opening. But, to be determined, it just depends on the news and how much maybe they want to manipulate, investors and Wall Street, if at all. And so, but still, that may just add more fuel to the fire going into Wednesday. And so that whole Monday, Tuesday, it's going to be interesting to see what happens, but it's not looking good. So going back to Thursday, March 31st, we also have the Philadelphia Fed Manufacturing Index for the month of March. So when you get more of a rare economic report, it'll provide a little bit more volatility versus a weekly report, because a weekly report just happens every week, and so it's just like, okay, we'll see what it's like next week. But a monthly report, you got to wait a long time to get the next report. And so these are what helps provide a little bit more volatility with the stock market. And so, and there's two of them. So there's one, there's another one before the stock market opens, and then there's one after the stock market opens, 15 minutes after the stock market opens. So it's just pouring more fuel in the fire, just adding more volatility. And then there's another one 15 minutes after the stock market opens. And then there's the existing home sales for the month of February that is scheduled to be released 30 minutes after the stock market opens. And this is kind of a big one, existing home sales, which is, the real estate, as well as existing home sales. That's our like used homes. That's like used cars, but in used homes. And so that has a huge impact on the economy versus new homes. New homes, we're talking, hundreds of thousands, versus millions. That's a big impact, and we've been seeing it just slowly decline. Since COVID, we were like in the 6 millions, and then we're down to the 4 million, all right, 5 millions, and now we're at the 4 millions, and we're forecasted to be less than the previous. So it's just continuing to get less and less, which is again not really good for the economy. And home prices are expensive, and interest rates are high, and so we may just see more of a supply that may be just sitting there. But until they start lowering interest rates, then we can see this number going up. But when we see the new home sales reports, that seems to be keep going up. It used to be like 300,000, then it kept going up to 400,000, 500,000, 600,000, and so. But it's almost like you're better off building a brand new house because you're able to build it cheaper than you would buying a used house. kind of like a vehicle, a new vehicle. You may be able to find a new vehicle that's highly discounted. You have huge rebates versus a used vehicle. You don't have that. So sometimes you can buy a new vehicle less than you can a used vehicle. And so when it comes to homes, numbers don't lie, and that's kind of what I'm seeing there. But this is telling us, be prepared for bearish activity because the forecast is less than the previous. And then going into Friday to top it off with the federal Jerome Powell is scheduled to speak 30 minutes 30 minutes before the stock market opens. So that will be very interesting. Dave, do you have any more input on the economic reports before we get into earnings?
No, actually, I just want to reinstate what I said before. Make sure that you have this investing.com up, the economic calendar up. Make sure you put it on US and the implied volatility at 3 stars, guys, because you need to know what's going on in the market, especially if you're new. I don't want you to go into a trade at, let's say, noon and forget to put a stop loss in, and then the market just tanks, and you're wondering, why am I stuck holding this bag? So, no, I think you did really well there, Carlos, and we really appreciate you going over all that. Thank you.
Absolutely. So yeah, let's dive into earnings because we are basically kind of approaching the end of the earnings season. The earnings season where they're focused mostly on the fourth quarter information, but a lot of times they'll talk about the yearly information too. So that's why this season has been very, very important. And so here is the this week's scheduled earning report. And we always like to get this information from the earnings whispers. And so, but tomorrow morning, Monday morning, we got some pretty good companies like SAIC, which is another a big a company, as well as NIU, which is kind of an EV scooter company, I think, for China. Then you got Stone, which is, I think, a Brazilian like point of kind of I forget what it's a POS. As a point, like a purchase system, like Square. So that's a big one. As Brazil and a lot of other South American countries are really expanding with technology. And so a lot of these companies are growing and starting to get some attention here. So Tuesday morning we have XPeng, which is a Chinese electric vehicle company. Plus they also manufacture flying vehicles in a form of like a drone, and that's kind of inspired some United States companies to kind of start doing the same. And just recently, in the last couple of quarters, the United States has appointed a California company to start researching flying vehicles. So that is in the pipeline. And so there's a lot of other great companies to look forward to that we'll talk about here Wednesday. Micron, so we got a semiconductor that's on the list. Chewy, and Intuitive Machines, which we'll talk more about. Nike, Lululemon, FedEx. I mean, there's just a lot of great stuff here. But I have the top 10 earnings or the analysis for the earnings, and so we'll take a look at that. Here, Micron first, since it's a semiconductor. This is huge because it's also going to provide a lot of volatility for the semiconductor segment, such as NVIDIA, AMD, and many others. And so Micron Technology, or the ticker MU, is confirmed to release their earnings on Wednesday, March 20th, and is expected to beat their estimate. Investors are bullish going into the company's earning release, but with a 56.9% expecting an earnings beat, which I find is a little low, but investors are optimistic. Option traders are pricing in some pretty good volatility with about an 11% price movement in either direction, where normally Micron technology moves right around between 4 and 5% in recent quarters. However, on Tuesday, February 27th, there was a notable buying amount of over 11,000 contracts of a $105 call strike price that expires Friday, April 19th. Dave, do you have any insight for Micron technology?
Yeah, sure. So Micron Technology, if you guys aren't aware, has been one of the leaders in the market. Now, it is not the leader in the market when you're talking about semiconductors themselves. And guys, if you want to, go ahead and click on my live screen now. You can click on over, make sure you're on my live screen. You'll see a big chart up here. And before I start, I just want to give a huge shout out to Robinhood Stock Market Watchlist and you, Carlos. I appreciate you being me, letting me be here, let me be a part of the show. And a big shout out to the moderators that we have out there that are keeping all of our chats clean, because we do have quite a bit of spam out there. It's hard when you have such a big Facebook program going, when you're trying to help so many people at once. You're going to get spam. So we appreciate all the moderators doing their job and keeping those messages clean. I know last night I had to do some cleanup, and I appreciate everyone else that's helping me do that as well. So that being said, Micron is one of your leaders, but it is not the leader. Your leaders in the semiconductors is going to be NVIDIA, SMCI, and AMD. Okay, those are going to be your leaders in the chip. Now, Micron might pose a beautiful threat to those leaders, especially with earnings coming up on the 19th. So if we look at this here, we see a William O'Neill's type cup and handle here. Now it's a little bit outside the William O'Neill's perspective of a cup and a handle. This is a little bit deeper of a valley and a little bit longer here. If we condense this information on a weekly time frame, you can see it a little bit more clearly, right? So here's the cup. It looks absolutely beautiful here, hitting a brand new all-time high last week of 101.85. That's what you want to see in a beautiful stock like this one. So what do? When we see a earnings like this, me personally on a technical analysis basis, I'm going to wait till after earnings and watch it form and set up on one of these moving averages. Currently, it's setting up on a 21-day moving average, which a lot of the institutional ownership likes to buy up on here. Now, I will say this, looking at the leader, NVIDIA, you'll see that we had a big pullback on volume, but it's setting up in multiple spaces with the semiconductors with this beautiful trend pullback. So what do I mean by that? We can draw a trend line right here, okay? And if it breaks through this trend, these are my type of plays. Now, this one doesn't look as clean as some of the other ones, but I will say Micron is looking very promising for the future. So keep your eye on this. Put this on your watch list. Absolutely. Great pick, Carlos.
All right, that looks good. So if you guys want to switch back over to my screen, we'll take a look at the next most anticipated earnings for this week. And so it looks like we got Nike. Nike is confirmed, which the ticker is NKE, and is confirmed to release their earnings on Thursday after the stock market closes, and is expected to beat their estimates. Investors are bearish going to the company's earnings release with a 53.3% expecting an earnings beat, which I still find pretty low. Normally, when we're looking at this regularly, an average amount is usually right around 65%. And so, but these numbers so far have been a little lower than average, but investors are still bullish and optimistic. Option traders are pricing in right around 7.5% price movement in either direction with Nike, and in the past recently it has been moving right around that 7 to 8%. On Friday, March 15th, there was a notable buying amount of about 6,600 contracts of about $115 call expiring Friday, April 19th. Dave, do you have any insight on Nike?
Yeah, I'd be happy to, Carlos. Guys, we're gonna bounce back and forth here between our charts, the charting platform, and the news. So if you want to pop back over to me, this will help keep you engaged as well. So make sure you're popping back and forth, because I want you to see the charts. The charts are very important to see here, as well as what Carlos is reading off the Facebook page. So if you pop back over to my screen, you'll see here, guys, the first thing I always like to talk about is where it stands in the overall market. So if we look at this on the daily, you can see that we have had a huge sell-off here in Nike since its highs in November 4th, 2021. It reached a high of 179.10, and then since then has been selling off pretty hard. We had a bounce up through this 200-day moving average, but currently we're sitting just below that 200-day moving average. So personally for me, when I see this, I have it has a lot of proving to do. Now, not to say that it isn't making new lower highs. What I mean by that, we have the low down here at 83.09, okay, right here. We also have a new higher low right here. And currently, if it holds, we have a new higher low right here. So if this new higher low can hold and we can see this thing push above the 200-day moving average and maybe get up above this, it'll show a new trend is in the making. But currently, if you look at the overall trend, you can see we are on a downtrend, guys. This is a downtrend here. So it's not something that I like to play with since I'm a momentum trader. My technical analysis shows that this stock has some proving to do to me before I'm going to mess with it. So we'll see what happens on the earnings that's coming out on the 21st to see if this wants to show something constructive. So down the road, we can continue to play with Nike.
Yeah, it looks like a lot of those, long-term investors, I would wait and see, what happens because, I mean, it looks like really it's a 50-50 chance. It can go either way, 50-50, 7, 8%, either up or down. But like you said, it does definitely have some proving to do, but it's like right there too. So to be determined.
Yeah. Yes, sir.
So if you guys want to hop back over on my screen, we'll take a look at the next most anticipated earnings release for this week. And it is the, I don't know exactly how to pronounce this one. Was it Pinduoduo?
Pinduo.
Pinduoduo.
We should definitely make a little short video of you saying that. Pinduo?
Maybe it's spelled wrong on here. Maybe there's a couple more on there. But PDD is the ticker and is confirmed to release its financial earnings on Wednesday, March 20th. Before the stock market opens. However, it is expected that it's also going to beat its earnings. Investors are also bullish going into the company's earnings release, but with a 78% expecting an earnings beat. That's way above average. Like I said, average is right around 65%. So this is nearly 80%. That's really, really good. That's basically you have a 4 out of 5 odds this thing is going to beat its earnings. And so option traders are pricing in some good volatility at 14% price movement in either direction. And previously it's moved right around that too, right around 15%. Now on Friday, March 8th, there was a notable buying amount of contracts of right around 5,000 contracts at the $60 put strike price expiring Friday, September 20th. So I'm wondering, is this stock already priced in knowing that it's going to beat its earnings because it nearly has an 80% expecting an earnings beat? What do you see on your chart, Dave? If everyone wants to switch over to his screen, let's take a look at his chart.
Yeah, this is actually pretty fun stock here, guys. I've been watching Pinduoduo for a very long time now. What actually caught my interest in Pinduoduo was its, I believe this was March. The March lows here. I noticed a huge excerpt down here of volatility. And I actually drew this trend line back here around November, December area. And I noticed that there was just a lot of volatility building up on this. You could just tell that the bigger retail investors were getting into the stock all the way back here. Now, I will say I did play this a few times. I made a small amount of money, but compared to where I could have taken earnings or taken profits out, I'm a little embarrassed. So green is green, but we could have done a lot better on this trade. Now, what I will say about Pinduoduo is the fact that its earnings does look very nice, right? It looks like a pretty nice looking stock when it comes to its financials. And a lot of people are talking about the China stocks and how well they've been doing lately. But if we look at this, we are on an uptrend. Okay, we are trending up. We are moving higher.
You can place this however you want, but regardless, if you look at the overall trend on this thing, it's moving higher. We're above a rising 200-day moving average. Now, this pullback, we've had a pretty hard pullback into its earnings here. So its last earnings, yes, it did have a beat, and this already is a faster mover. Its average daily range is 4% on this overall ticker. So when you expect to be in this thing, you can expect to get the direction that you're going in pretty fast, okay? So 4% a day is a faster mover than what normal people are used to getting into, right? Now, it's not like a penny stock fast where it's going to move 17 to 20% a day, but 4% is faster than your Dow Jones industrial stocks like Coca-Cola and Amazon, okay? So that being said, with the increased volatility due to its earnings, depending on what comes out, if we have another big expectant beat, like Carlos was saying, it might have been priced in, but with a big pullback like this from its top, from its most recent high of 152, 153, with a big pullback like this, we might see a nice push off of this low down here if we have a good expected earnings beat. So let's say it blows out of the water and it has a good forecast for its next earnings. This thing could really take off. Now, again, me saying this is my thoughts. They're not yours. It's not one for me to ever buy or buy anything before earnings. So I would always suggest waiting till after earnings to get into this if you plan on doing it. Okay. And that's all I got. And if you guys want to pop back over to Carlos's screen now, he's going to carry on with the next earnings.
Yeah, that looks good there. That looks like there's plenty more room for uptrending. So that's a good chart.
Texted 955. If you don't mind muting your mic for us, we do appreciate you being here, but it does make it kind of difficult to hear with the background. I have kids too, though. I think we all can understand. But if you could mute your mic, I would greatly appreciate it.
All right, so yeah, if you guys want to switch over to my screen, we'll take a look at the next most anticipated earnings release. And the next one we see here is the Science Applications International Corporation, or also the ticker is SAIC. It has confirmed the release of their earnings again on Monday morning before the stock market opens. However, investors are expecting to have it beat its estimates, and they're bullish going into the company's earnings release with another 50% expecting an earnings beat. So very interesting. Option traders are pricing in right around a 5.5% price movement in either direction, which normally moves right around 5%. And so let's take a look at the charts on Dave's screen on SAIC.
This is definitely a stock that I have not found yet. Science application. So I am new to this stock, but I'm not new to this type of chart. This thing is going almost parabolic in a sense. If we zoom out to this, it's almost going straight up here, Carlos. With the side of this pulling back like this and heading higher, this thing is dang near going straight up. And you can see the 200-day moving average is just showing its trend right here. I mean, this thing is really pushing. Now, this is a slower moving stock at 1.5%, but clearly it's doing something right here because these people are going crazy over these over this stock. Now, its last earnings had an earnings beat of like 75 cents of its earnings per share. And that's why it just jumped up, skyrocketed here, and then found a nice support on its 30 and 50-day moving average. And it's still carrying on wayward sun. I mean, it looks absolutely beautiful. Now holding a 10-day moving average right before earnings is about to come out on the 18th. So this is a beautiful looking stock. This isn't something that I could technically get into right now. I'm looking for something like this downtrend here, and then a breakthrough on volatility. This would be my area to get in. So right now, when I'm seeing all of this, I'm seeing all of this movement. It's not something I can get into right now because it's just taken off without me. But let's say this thing does build another beautiful trend. This looks pretty nice too. But let's say it does beat its earnings expectancy. It carries on higher, gets up to 160 and pulls back and catches its 10 or 21-day moving average on a beautiful trend. that might be the area to get in. So let's keep an eye on these earnings on the 18th, guys, because wow, this is a beautiful looking trending stone to the north side.
Yeah, but it definitely looks like it's already priced in on that one.
I would say so. Yeah, I would definitely say it's already been priced in. And the market's a beautiful thing. It really knows how to do that. And if you guys are new to the market, you'll see that time and time again. You'll see these stocks. Some people will say, "Oh, it's overvalued. It's overvalued." It's not overvalued. It's predicting its future. It's taking its earnings growth and it's multiplying that by 10, and it's buying it into it, so that way when everybody else is aware, the big investors already have their positions and they can sell into the little guy once they figure out it's a good stock. So.
Yeah, and that's where, when we start seeing like good news, like they beat their earnings, but the stock is going down. A lot of people are confused. How come? How come it's going down? They had good news. Well, that's one of the reasons why we have this saying: you buy on rumor, sell on news. So now the news is out. It was kind of predicted it was going to beat, but then it goes down. That's just a matter of other people trying to buy in that nice opportunity and hopefully for it to recover. But but on a situation like this, especially if you're a long-term investor, short-term investor, and you're not in already, you definitely want to wait and see what happens, because that it should come down quite a bit, knowing that it's going to do what it's going to do. So let's take a look at the next earnings. If you guys want to hop back over my other screen here, and then we'll take a look at Stone Company, which again I believe is a Brazilian kind of a point of sale, is what I was trying to
read. I'll read exactly what it is because I'm interested too. So Stone is a provision of financial technology solution. It caters to the merchant and partners that conduct electric commerce across in-store, online, and mobile channels. The firm offers a cloud-based technology platform, electronic payments, and automation of business. So yes, I do believe you're right. It is like a Square, a Venmo, or a PayPal.
Yeah, but for like South America or something. But this is like the second.
Is it? Okay, I'll see what
double check. But this is like the second time we've analyzed this, and in our group we've had our group open for like 6 years, and this is
Cayman Islands. It says
where.
It says it's out of the Cayman Islands. Very interesting.
Yeah, very interesting. But I do know that their economies down there are growing. Especially with their crime rate. They claim their crime rate's going down too, as a lot of the they think they're coming up here in the United States. However, all this is just manipulation that we want to take with a grain of salt. Manipulation is designed to kind of persuade the economy and people for their own agendas, but we just want to be aware of that and not being persuaded, but to always kind of identify how things are going to affect the market. That's what we care about. And so, and with Stone, which their ticker is STNE, is confirmed to release their earnings on Monday after the stock market closes, and is expected to beat their estimates. Investors are bullish going into the company's earnings release with a 60.7% expecting an earnings beat. Option traders are pricing in right around a 12.7% price movement in either direction, where normally it's moved right around 11% in the past. On Thursday, March 14th, there was a notable buying amount of 10,000 contracts of a $22 call that expires Friday, March 22nd. Dave, what do the graphs look like on Stone? If everyone wants to kind of switch over to his screen, let's take a look.
We're bouncing back around, Carlos, but I think it's all for a very good reason. This chart here is looking very promising. I love to see a beat down stock like this on good news, and when we start to see earnings come in like this, it shows that you have a lot of room to grow. And when you see more volume, like we talked about in PDD, you see more volume popping in down here, a lot higher than average volume than previously. That's going to show us that there's more volume than that was traded over here. So there's not a lot of overhead resistance. Now trading above a rising 200-day moving average if we can see a nice pop up in this STNE, this Stoneco, that would be a beautiful, beautiful move. If you guys haven't already seen, I have an alert set at the high of this base breakout here. So even if it does break out above this, I'm going to be alerted that the earnings has taken place, and we might see what I call an episodic pivot. An episodic pivot is where we have a beat down stock that has either news or earnings growth that jacks up way up high on the price, and it shows everybody that there's excitement. It'll catch Wall Street off guard, and then we might see another push higher. But obviously, like I've told you before, we have to wait till after earnings to see what happens here. Only trade price action. I don't try to predict. I try to react. And in this case, we're going to wait and see what happens here with the earnings. But I will have to say, out of all the stocks that we have looked at today, this one is by far the most interesting because it's beat down on lower volume. And now we are seeing a basing pattern form right here. And it's beautiful because we have an uptrend here, right here, Carlos. Absolutely beautiful uptrend above a 200 and rising 200 moving average with earnings coming out right here on the 18th. So that is, I mean, that's tomorrow, guys. That is very exciting. This is why I love to do technical analysis. This is why I'm absolutely obsessed with it, because when you find stocks like this, it's very, very promising for the days to come. So Monday, we might have a very robust trade on STNE. So that's what I got for you, Carlos. What do you think?
No, you're definitely right. That looks great. It had a lot of, I think it had a lot of hype. Usually when you see that big, tower, that big pyramid, there was a lot of hype there, but it also shows potential and of where it could go again later on in the future. And so, and it looks good for those short-term, long-term investors. I would definitely be all over this, especially with this company in growing economies.
Yeah,
absolutely.
Yeah,
I love to hear the growing economy. I've heard about this in South Africa a lot. I've looked into different pizza and fast food companies. Unfortunately, the pizza and fast food companies, they're a lot slower movers, and I'm a momentum trader, so it's hard to take a position size and sit and wait. I want to make money fast. But yeah, if you can find a faster moving company, which just moves about 3%, which is good, but it's not the fastest, but it's better than like your McDonald's or your Coca-Cola, right? If you can find a smaller company moving faster in a growing economy with positive news expectancy like this, that's definitely something to put on your watch list, guys. Don't sleep on Stoneco.
All right, if you guys want to switch over back to my screen, we'll take a look at the next most anticipated earnings, and is the Lululemon, or how do you pronounce it? Lululemon.
Yeah, Lululemon.
Lululemon is, or Lulu for the ticker, is confirmed to report their earnings on Thursday, March 21st. After the stock market closes, and is expected to beat their earnings. Investors are bearish going into the company's earnings release with a 75% expecting an earnings beat. Option traders are pricing in right around a 9 to almost a 10% price movement in either direction. And normally this has also been a pretty volatile stock in the past and has moved right around 9%. However, on Monday, March 4th, there was a very notable amount of buying contracts of about 1,600 of about the $460 put strike price that expires on Friday, April 19th. What do the graphs look like on Lulu? If everyone wants to switch
about
over.
as good as that picture you got up there.
Oh, yeah.
Lululemon is very, very special stock to all of the ladies that are out there. They are very popular, very, very, very popular. And now they're just like every other, I mean, I don't wear them, so I can't really tell you, but they're spandex. They're spandex shorts. And I went on their website because actually back here, when we kept hitting this area of resistance, I was looking at the stock around 512, and I watched it hit its head so many times on this area of resistance. You can see it's bonked its head back here in August of 2020 and 2021, 2022, 2023. This thing hit its head so many times on this area, but it started to create these new lower highs. This is what I love about technical analysis, guys. This is what gets me so excited. And you can see this green line. I had it charted as a red line. I made it green so you can see it a little bit easier. But you can see this rising line here. And every time it hits its head, it's like ping ponging. It's getting tighter and tighter. That's how you can see the rise of the supply and the demand getting tighter and tighter before it breaks out. And then it came back right here. This was the determining factor for this trade. Now, I did make a little bit of money off this trade, but that was before I had way better sell rules than I did. And I only made a little bit of money off the stock when really I should have been selling at around, well, close to the top. I wouldn't have sold at the top. With the break of the 10-day would have been my new selling rules. And this thing only moving at 2% at a time. Well, actually, I would have gotten out before earnings. So I actually would have gotten out the day before earnings. But you can see this. It came back and it retested this line that I drew out for you. It was resistance, right? It couldn't break through here. It breaks through and then ends up being support and then never looks back, Carlos. I mean, absolutely beautiful stock. Now it's pulling back and it's creating this beautiful trend line, which looks like it's close, if not already breaking out of this area. So this looks absolutely promising on a rising 200-day moving average. It's not following any other one of these moving averages like you've seen here on the 10-day moving average. It followed this very well. See how you can just predict that it's going to bounce and bounce and bounce and bounce again. It's absolutely beautiful. I mean, you see it following this. Now it's not following a moving average, so it's something I would want to wait to find out what's going to happen here on the March 21st. But I would have to say, if you're looking for good stocks to put on your watch list, and you're sick of trying to play these low float, these small cap penny stocks, this is what you want to look at, guys. This is what you want to put on your watch list. And this is what I love about Carlos bringing these stocks to you, because he's trying to keep you safe. If you run through a lot of these things, you'll see people talking about, some really, really crappy stocks. And, I've had to go in there and talk and put sense into a lot of different people. Sure, you might get lucky, but I promise you, 9 times out of 10, if it's below a 200-day moving average, it has proving to do. This is above a rising 200-day moving average, and it is a stock that's showing profitability. So let's go ahead and put this on our watch list. And thanks for bringing this to my attention, Carlos. I'm definitely going to put this back on my watch list. I kind of took it off my watch list because after seeing how much money I left on the table, only making a couple $1,000s on this trade when I could have made tens of thousands of dollars on this trade, it made me sick. So I took it off my watch list, but it's back on there now. I like to see this trend break, and let's see what Lululemon has in store for us on the 21st.
That is great. And I'm also seeing within the moving averages, it's in that process of what's called a crossover. A crossover is when the price line cuts through all moving averages and then they cross over. They flip-flop. And that's pretty much our last kind of that last trending signal, letting us know whether it's getting ready to go up or go down. And in this case,
Carlos is talking about this area right here. And you can see the increased volatility when it happened too. So this is the crossing average. So the 10 is below the 21, the 30, and the 50. And then you can see when you hit this huge X circle volume and this pullback right where I talked about, where it retested this price, this breakout area, you can see now it tested it, and as it pushed off, you can see the moving averages all start to line up together. The 10, the 21, the 30, and the 50 then start sloping together. So that's a great point that you brought up there. I forgot about the cross, Carlos. But yeah, that's why it's great to have two different people coming together and putting their analysis together, because what I see and what you see can come together and create a beautiful pinpoint. So with our powers combined, Carlos.
Oh, absolutely. But if you go with the current part, there's only one more line that hasn't crossed over, and that's that green line. However, we have the 3 lines that are already crossed over, but we just got that one left. And that looks good. This is a good sign. That's kind of how you want to also kind of read some of these charts. That way you kind of know kind of where things are at within its process. And like I said, it's just right there during that what's called the crossover. And so,
And guys, I just want to put in a shameless plug really quick since I haven't yet, Carlos. Guys, if you want to, after this, go to lofitrader.com, or I'm sorry, Lo-Fi Trader on YouTube, and hit the subscribe button. You can see it on my channel right here. We do all technical analysis. Everything is absolutely free. If anybody asks you for any money, they are a scam. We do everything for free, just like Carlos does it here for you guys. Everything is absolutely free. All I ask for you is your time. So make sure you go to Lo-Fi Trader on YouTube. It's all one word. Hit that subscribe button. We're growing an amazing community. And of course, always with the help of Carlos and his team at the Robinhood Stock Market Watchlist. So I will be here no matter how big I get or how big Carlos gets. I will be here to help this crew because you guys have helped me so much. So thank you for putting my shameless plug in, Carlos. And if you guys will switch back to his screen so he can show the next anticipated earnings, I would greatly appreciate it.
absolutely, thank you. And we also have our own YouTube channel for these meetings, so that way we can always, if you're unable to attend, they'll be recorded and posted on our YouTube channel, as well as if you wanted to go back and re-watch it, and because some people will test this meeting. They'll participate, then they'll see the market do whatever it did. They'll rewatch it at next week, and then they're just amazed of how accurate and how well this information is. The accuracy of all this information is near 80-90% of our predictions, and so it's just amazing how well that we can kind of come together like this and provide these analytics. And so the next financial earnings release is FedEx, or FDX for the ticker, is confirmed to release their earnings on Thursday, March 21st, after the stock market closes. So it's in the evening. However, it is expected to miss their estimates. Investors are bullish going into the company's earnings release, with a 38.9% expecting an earnings beat. That's just weird, where you got so much of this bullish stuff, it almost seems like it's just manipulating. Oh yeah, investors are bullish, but 38.9%, that is so low. Option traders are pricing in right around a 6.8% price movement in either direction, where it's normally averaged right around 5.5%. Now on Wednesday, February 28th, there was a notable buying amount of 1,000 contracts of the $245 call expiring on Friday, March 22nd. So that's really close. But let's take a look at the charts and graph over on Dave's screen. Dave, let's take a look and see what your thoughts are on that.
Carlos, if you're sharing your screen and not just your window, could you try and click on mine so you can bring it up on your screen? So that way when you record it on your YouTube, it actually pops up on your screen. Can you just try that for me?
No, I've been doing that, yeah, because that's definitely important, yeah.
Okay.
I'm watching your screen right now, and I'm not seeing it pop up. So
yeah, no, I'm using a different method.
Okay. Well, I'll just go over it right now, guys. And if you want to click on my name down here, Lo-Fi Trader, you'll see the stock pop up. This is FedEx, and like Carlos said, their expectancy is pretty dang low. Well, a big thing that we need to note here is FedEx is one of those big movers. I do believe it is in the Dow Jones Industrial. It's a big boat of a stock. It's very, very weighted down because its market capitalization is so high. It only moves 1.5% of its average. That's its average daily range. It's only 1.5%, meaning if you bought one share of this thing, that one share is only going to move 1.5%. So if you bought in at 255.81, 1.5%, this is its average daily runs, and you're at 252.32. So you got to understand, guys, it's very slow mover, and so you'd have to have a lot of capital in this thing to really see whether it be an investment or a day trade or a swing trade. You'd have to actually put a lot of capital to work in order to play this thing and make a very lump sum. Now, if you're playing longer term, this is on a very nice rising 200-day moving average. And FedEx, has been around for a long time. It's a very notable stock. You can see it's a long-term uptrend here. You can see the longer term uptrend here, but you can also see that we are on a short-term downtrend. So depending on where you sit and what you see in this, we might want to wait for this break here, okay? So I'm not seeing too much on the stock because it's just such a slow mover. All I'm seeing is we are getting a little bit of resistance in this area right here. Sorry about the sounds, guys. We are seeing a little bit of resistance right here in this area. So we might want to wait to see if it can break through or what the earnings actually comes out. Now, if we have an earning expected beat and it just gaps up over this area, I would be waiting for a pullback for continuation. That would be nice. But right now, this is what I consider diddling in the middle. This isn't good. This isn't bad. It's more of a neutral area here. And if you watch with both eyes, this thing will put you to sleep. So just be careful trading this thing and having high hopes on one direction or the other, because it will put you to sleep going back and forth.
Yeah, it almost seems like it's getting ready to downtrend and for quite a while. And so we're entering the spring and the summer season, and I'm just not sure if this is kind of their prime time when normally it would be during the like Christmas holidays. And so, but we can kind of see where it's kind of done really well with that, and maybe we could see a little bit of a downtrend for maybe the next couple quarters until maybe the fourth quarter as we approach that holiday season. But right now, I just personally feel a little bearish, but it's like you said, it's not really a big mover. Whether it goes up or down, we're probably talking just a couple percentages here and there, but it'll probably just range kind of where it's at. So, but let's take a look at some other most anticipated earnings. If you guys want to flip over back to my screen here, we'll take a look at Chewy.com. Their ticker is CHWY, and they're confirmed to release their earnings on Wednesday, March 20th, after the stock market closes, and they're expected to beat their estimates. Investors are bearish, however, going into the company's earnings release, but with a 69.2 expecting an earnings beat, which is very interesting when you see that they're expecting to beat but also bearish. We have a lot of conflict of interest kind of thing, and that's where it's always interesting to take a look at the graphs and charts, because sometimes we see where it's priced in when we kind of start seeing this kind of unusual verbiage. However, option traders are pricing in an 18% price movement in either direction, where normally they've averaged moved right around 9%. On Friday, March 15th, there was a notable buying amount of 10,000 contracts expiring on expiring on March 22nd, but these are a $22 call strike price. So it's very interesting because we're expecting a lot of volatility. What do the charts look like on Chewy, Dave? If you guys want to switch over to his screen, let's take a look.
So
before we all hopped on here, my buddy Daniel J, or Dave, also known as, he keeps switching his name on me. We actually went over Chewy, and so I'll make it relatively quick, guys. You can see we are on a huge downtrend here. Huge downtrend. I mean, I could draw this out, but I don't think I really need to. This thing it looks like it's heading towards penny stock territory, even though it's trading at 17.35. It doesn't seem like anybody wants to hold on to the stock right now. And it's below a very declining 200-day moving average as well. So when we look at this thing, the only thing that I can say that would be a huge change in direction for the stock is if all of a sudden we get a huge earnings beat and this thing gaps up to like 38, 46, or $54. I mean, it would have to be something just crazy. If it even gapped up to $30, I mean, I'm telling you, it would have to have a very, very crazy change in direction.
What's the price now?
Or news. Right now it's at 17.39 trading in the after hours.
So 17.39. So this is how we do this. So 17.39. We anticipate an 18% price movement. So what's 18 percent of 1739. So we just do that, do the math here.
Quick.
So it's about $3.13.
So
So
18%
18%
would
would
be
be
an
18% move, guys, would be $35 roughly.
It'd be
trading at $35 if it went to the north side.
Wait,
Right.
what's the price of it now? Well, you said 17.
17.
Yeah, no. So 17. So it'd be $3.13. So then you add the 1739. So we're at $20.50. So that's where
I'm sorry, what
18
was the percentage?
18%. So 18%
Oh, I'm sorry.
of
Okay.
$17.39. So that would put it at $20.50. So that should be right about there. So which is perfect, and there's plenty of room for more, for the weeks to come.
Well,
For me, it would have to really gap up over this 200-day moving.
Oh yeah, and there's plenty of time for that for the next quarter. But for now, that 18% jump is anticipated to go from that 1739 to that $20.50. All within a very short period of time. But it looks like it could continue that momentum where it'll just keep slowly going up, 5% every week or so. And so, but yeah, no, that looks good.
Good.
So let's take a look at the next financial earnings. If you guys want to hop back over to my other screen here. Now this one that we're going to talk about, we have never analyzed this one. This is called intuitive machines. And sometimes a picture can say 1,000 words, and that's why I post certain particular pictures on here. That way it kind of gives us a little bit of an idea of about the company. And what do we see with this company? We see a moon in the background. We see space, and we see electronics, or maybe a landing craft for landing on the moon or other things and whatnot. So this could be a very good potential company. But when I did a little bit of research, it is a penny stock. And so Intuitive Machines, or their ticker is LUNR, is confirmed to release their earnings on Thursday, March 21st, before the stock market opens. And so investors are bearish going to the company's earnings release, but with a 58.8% expecting an earnings beat. Option traders are pricing in right around a 23.7% price movement in either direction, where normally it's moved right around 9.7% in recent quarters. However, on Monday, February 26th, there was a notable buying amount of over 3,000 contracts of a $10 call that expires Friday, April 19th. Dave, if you want to pull that up on your graph, let's take a look at his chart. If you guys want to switch his screen, let's take a look at this very interesting stock.
All right, guys. So whenever I see this is what we call pump and dump. And as Carlos said right off the get, this is a penny stock. And penny stocks usually move this crazy. Now, don't let this get you too excited, because you could be the guy buying up here, right? And then you could lose, $100 a share, depending on how much you got into it. But if you want to be that guy that's selling up here, you need to wait until you see volume like this coming in, right? So now I'm not recommending anybody plays this at all. I would say hands off, especially if you're not used to playing penny stocks, okay? Because if you don't understand risk management, if you don't understand, anything that has to do with these penny stocks, hands off this. This is an absolute crazy mover. It's moving at 20.4% average daily range. Okay, so we're talking in 4 days you could double or completely reduce your account to zero. Okay, that's how fast this thing can move. So you guys need to understand when you're looking at something like this, it's going to move on anything. It's going to move just because. It's going to move because of news. It's going to move because of earnings. It doesn't matter what. It could be a good gust of wind in the right direction, and this thing will go to 100 or it'll go to 0. Okay. So that being said, just be very, very, very careful. When I play this, I don't take into consideration any news, any earnings expectancy or anything. When I look at these, the only thing I look at is price action. And what I see here, and these aren't buy or sell recommendations, if you have a huge push up on volume, a big sell-off, and now it's following a 200-day moving average, and you can see this is called VPC, or volume price contraction, meaning we had a huge push up on volume, and then the pullback was held off, and you can see buyers stayed in this. They actually held some of its gains. So if it came up off of this low and it went up to 496%, and then it came back down, we're still holding about 150% of those gains, guys. So that being said, if we have people that are still holding and price action shows interest in the stock and more volatility starts to come into this trade, we might see this thing push up higher and faster. But one thing I want to point out is I always mark this average VWAP area of what's been traded at the highest amount. So at this area of between $10 and $11, I'll just mark this out. This is going to be the area that it's going to have a very hard time getting over. If it gets over this stock could go even higher. When I say even higher, I'm talking it could go all the way up to this area right here of $90. Okay, because these are the highest traded areas in this stock. There's no, I'm not just picking some random stock price or anything like that. I'm literally telling you where the most volume has been traded, and that's at $90, at $10 and $11. That's taking the volume into consideration and the price action in consideration, and taking the volume weighted average price and plotting this out for a technical pattern for you. It might sound confusing, but I've been doing this for quite some time now. This right here is what you got. Okay, this is beautiful price action. This is well calculated. The thing is if you get in this thing might pop up, get everybody they want to, and then they'll pull the rug. So if you're going to play this, make sure you have your stops set. Make sure your stop is set no lower than this 439. Because if it goes any lower than this, you don't know where this thing could go to 0. You know. So it's a very interesting stock. Of course, stock speculation is always fun, especially in these penny stocks. But it can make or break your account. So I always want to warn people: these buy or sell recommendations. These are my thoughts, not yours. Be very careful when it comes to these very fast movers.
Oh, absolutely, and a lot of the penny stock enthusiasts would say, but the neat thing with this particular penny stock is that it's not a biopharmaceutical stock, which is very known to do that, all day long. However, this is a completely different stock, and we see within the moving averages, we're starting to see that crossover, where now it's starting to cross over. It's been down for a long time, and now it's crossing over all moving averages, whether it's these short-term moving averages, long-term moving averages. And so it is definitely looking more and more bullish to me, and if being the company of what it is, we're kind of getting back into this space race of landing things back on the moon to getting ready to send more things to Mars and stuff, especially as we see more and more countries kind of doing the same thing. China just landed their little rover thing on the moon several months ago or a year ago, and we got more countries that are kind of trying to do the same thing and stuff. And so it's like it's time to reinvest into American space programs. And this is one of them. So it's definitely, again, one of the stocks that we've never analyzed out of the 6 years we've had our group open. So this is a very, very interesting time to discuss this stock. And thank you, Dave, for for showing this.
Oh, absolutely.
So, but let's take a look at, if you guys want to hop back over to my other screen, let's take a look at the next earnings release, and that's going to be Xpeng, which is going to also probably affect some other Chinese EV stocks like NIO. And so both of these kind of play a good part in the electric vehicle world with China, but also China's trying to dominate the EV segment in the entire world. We don't see any of these here in the United States because our previous presidents have once said, because China wants to sell these here to America, and America, our politicians have always said, if you guys want to sell these here, you have to build them here, and so they just haven't quite done that yet, or I don't even know if they can, because otherwise, the United States will just think, oh, China's just trying to spy on us, blah. So it's always just a big political thing. But China is selling more and more of these all over the country, and if you start reading a lot of articles here in the United States, it's talking about how this is threatening the American economy when it comes to EVs, but I think when they're talking about that, they're talking about how we import our EVs to other countries. How China will kind of intercept that, and we'll lose that marketplace. And so with Xpeng has confirmed the release of their earnings on Tuesday, March 19th, before the stock market opens. And however, they are expected to miss their estimates. Investors are bearish going to the company's earnings release with a 49% expecting an earnings beats. And one thing that it takes to build these vehicles is a lot of microchips and very highly sophisticated microchips. And a lot of these microchips that China needs, we got them, and they don't have them. So that means that they have to produce more cheap, low-powered or low processing chips to try to make up for it. And so option traders are pricing in right around a 13% price movement on either direction, where normally it moves right around that 12 to 13%. On Monday, February 26th, there's been a notable buying amount of 6,000 contracts for an $8 call that expires Friday, April 19th. Dave, what do the graph looks like on XPEV?
Yeah, sure.
Yeah, sure. So,
Just
you
click
guys
on my
click on my
screen
screen
here.
here.
Just the first thing I always want to note, and you guys should know this by now already, is it's below a 200-day moving average. Now, that 200-day moving average, unless it breaks out above that area, I'm going to be hands up. And just to go on what you said with the whole Xpeng and the chips, we already know that the government has put restrictions on NVIDIA on selling to China their chips. So they're already putting a stop and a halt on exporting any type of chips for them to even make this kind of stuff. So it's going to be very, very hard for a company like this to get chips to continue manufacturing. They've got a lot of embargoes, I believe that's the right word, to keep from being able to obtain those chips and to continue building. So let's keep that in mind too, guys, that it's down here for a reason, and with an earnings beat of an expectancy, that would be an eye opener. That would be something to say, hey, we took Wall Street by surprise, and this thing is trading higher now. That would be great, but we need to wait to see that. Other than that, it's just a low hanging fruit of a stock, but it's not ready to pick.
It really is, and we can see that it looks like we're starting to see on the graph with the current area that it's starting to uptrend. We're also starting to see that crossover type of signal, which is all very good, and it just looks like it's just kind of bouncing on the bottom, but it has a lot of potential. And when Biden came into office, he immediately prevented China from receiving a lot of our American, highly sophisticated microchips. And so when Trump was president, he was always kind of, you scratch my back, I'll scratch yours kind of thing, tit for tat. And so, it was always kind of a good partnership. So it allowed us to sell them microchips, and they can put them in their cars and all kinds of things, and it just became a very good partnership. And that's where that was when like Neo was at that $50-$60 area. But as soon as after the election hit, all the stuff just started to plunge, and all the analytics and the forecasts all said, oh, in 12 months, yeah, it's all going to go back down to $5 and whatnot, and it did. And so and that's why it's important after this election. So during after November, December, we need to reanalyze a lot of the next 12-month forecast, because it's all going to change like almost instantly. It was very I was very surprised how quick the forecast changed and everything as soon as we were elected a new president. So but going into that too, just know that as we get closer and closer to the election, that only provides uncertainty. And anytime when we have uncertainty with the stock market, you have people that sell because they want to wait and see what happens afterwards, and then they'll get back into it accordingly to how the market reacts. And so, the market's pretty high right now for a lot of things. If we start, looking into our economic cycle and our stock market cycle, I believe we're kind of at the market top. And so we need to kind of come down before we can kind of come back up. But you'll also notice that that certain things are pretty low, like energy. And energy, if you're in the long term, you probably want to get out of technology and get into energy since it's low. And energy usually goes up quite a bit during the spring and the summertime. So it's a good transition to kind of get out of one segment and into the other. But with this one, XPIV, though, not only are they selling cars and working on that technology, but also those flying cars. If you haven't looked into that, definitely start YouTubing some of the videos there. But also with some of the American companies that are starting to developing flying cars here in the United States. There's a company in California that the government kind of appointed to really expedite this process, because there's just more and more vehicles on the road, and eventually we could start seeing them flying in the air. And a lot of this could be autonomous, where it just kind of flies itself and whatnot. And so it's going to be a very interesting time once we get to that point. But that's just really right around the corner. And XPIV is which really kind of helped inspire a lot of that stuff. So it's going to be interesting to see what happens here in the next several years with that. But we'll always talk about that here later on down the road. But let's take a look at the next most anticipated earnings. If you guys want to switch over to my screen, I think this is the last one, which is kind of like this is like the 11th one, so it's just kind of like a little extra one. This is one we have never analyzed before, and I'm not sure really how to pronounce it, like Taysha Gene Therapies. So the ticker is TSHA, and they're scheduled to release their earnings on Tuesday, March 19th. And investors are bullish going into the company's earnings release, but expect an inline results. So I wish we had a little bit more information on that, but option traders are pricing in right around a 22.8% price movement either direction. So that's huge. And on Wednesday, March 6th, there was a notable buying amount of 1,800 contracts of a $2 put expiring on Friday, April 19th. So sounds like it's definitely a penny stock, but it's on this list for some reason. And I think they're like a cancer treating company. And so if you watched the President Biden's the State of the Union address, which was very interesting, by the way. But one of the things that he said, other than talking about semiconductors, which provided some pretty interesting characteristics, but he said that he wants to create the cure for cancer, but he wanted to start using a lot of these companies, COVID companies like Pfizer, Johnson & Johnson, and Moderna, to now develop a cure for cancer. So that's going to be interesting. So I don't know if he's just all talk or if they're actually going to go gung ho with this, but we could see other companies start developing that too. So that was very, very interesting of when he said that, and now all of a sudden we see this on here. Dave, what does TSHA look like on your charts? If you guys want to switch over to his screen, let's take a look.
Yeah, sure. So TSHA is a more recent IPO. They came out in 2020, it looks like. 9/24/2020 is when they were released. You can see they had a pop up to 33.35, but now all the way down here as a penny stock, you can tell they had a market maker come in here and get them above that dollar area, which they have to be above that dollar area in order to be traded under the NASDAQ rules. If you're below that dollar for too long, they will delist you on the NASDAQ and you'll have to go to OCT. So it looks like that's what they did here. They got a good pop. They pulled back. They held a 200-day moving average. Another pop here and a pullback right before earnings, which are going to come out, like Carlos said, on the 19th. Now, that 7%, I believe you said, earnings expectancy could take you up to $2.65 or as low as $1.68. Which doesn't sound like a huge difference, but in penny stock world, that is that 7%. Now, its average daily range is 13.6%, which is a big mover, guys. So this is a penny stock. This is one of those that could be a fast mover, but you can see we are getting some price action above a rising 200-day moving average. So this is a stock that I personally think needs a little bit more time because we're showing a short-term uptrend, but long-term downtrend. But we are above a rising 200-day moving average. So we have conflicting technical patterns here. But if we see a nice push on volume through these highs, we might be able to see some continuation in the overall technical support of this. I'm trying to figure out how to say it. Taisha? We'll just call it the gene therapy stock. So that's about all I got.
Yeah, it looks good. For a penny stock, I would definitely put this one on my watch list as it's kind of trickling past all the moving average and it's showing more volume, showing more activity. And as we get closer into other earnings, and then like I said, with Biden now talking about how they want to really start developing cures for cancer, that just kind of never really seen anyone really say that as a president. As a lot of people speculate, oh, they always have it. They're just trying to, because the medical industry is a multi-trillion-dollar industry and stuff. They start developing cures for cancer. They're going to jeopardize this amount of revenue for treatment. However, things can only last for so long before someone is going to to develop it, whether it be our country or some other country. And so usually within our country, if we start seeing that someone's going to develop something, it's like, okay, we got to start developing it too and try to do it better and be the first ones to release it. And so so it's going to be very interesting, but this is all fairly new stuff that's been kind of talked about here recently, and we're starting to see more activity. So it's just definitely something we want to really keep a watch for, because there could just be more improvements and more updates and news regarding this. Now, if you guys are hopefully you guys are back on my screen here. I always, after we do our due,
yes. Can I interject just really
Sure.
quick? I'm really sorry about
No worries.
that. I just want to say, first of all, thank you so much for letting me be here. I really, really appreciate your time, letting me do this technical analysis. I love it. I love you letting me be a part of the community. But I do have another meeting at 2 o'clock, so I just wanted to stop you there and say thank you so much. Thanks for having me, and enjoy the rest of your meeting. And thanks, guys, for joining us today. I really appreciate you. So we'll see you next Sunday, hopefully. And I will also be here March 20th before 2 o'clock for the Fed rate meeting. Okay, guys? So make sure you hit that like, hit that subscribe button. And again, Carlos, I really do appreciate your time.
Absolutely. Thank you, Dave.
Bye-bye. Bye-bye.
All right, guys. again, after we really kind of do our due diligence on economic reports, our earning releases, we always want to go to the investing.com's article, the top 5 things to watch in the market in the week ahead. That way, we don't miss anything, because they may, talk about something that we haven't yet. And so, and this article is always posted every Sunday morning in our group, but also on the investing.com's website. So if we click on it, let's take a look to see what it says. And so it says the central bank decisions will be front and center in what's said to be an action-packed week as investors attempt to gauge how close the Federal Reserve is to cutting rates. The Bank of Japan appears to be shaping up to exit negative interest rates after months of anticipation. Meanwhile, AI darling NVIDIA is to hold a closely watched developer conference. Here's what we need to know to start our week. The number one is the Federal Reserve meeting, which is something we've talked intensely about. Last week's hotter than expected U.S. producer and consumer price data prompted traders to rein in bets on future cuts from the Fed. All eyes are now on Wednesday's Fed meeting and any clues of the central bank's outlook for rate cuts, the resilience of the United States economy, and the possibility of an inflationary rebound. Earlier this month, Fed Chair Jerome Powell said officials have gained greater confidence that the inflation is moving sustainably toward to the central bank's 2% goal, but added that they want more evidence that inflation is slowly before they begin easing. And that's where, when we were talking about the scheduled interest rate meetings throughout the week, we think, not the week, but throughout the year, we think that the Fed is still likely to ease at mid-year. So they're thinking June or July is when they could start, where we could start seeing them lowering interest rates. So we had one in May. So it looks like we could anticipate that the forecast for May will still continue to be the same, but then going into June and July, that's where we can see they're going to start lowering interest rates. So this is a clue, you guys. But the FOMC meeting will keep us squarely in the wait and see period by another 1 or 2 meeting cycles, just like what we're talking about. With Jay Powell repeating that he needs a little bit more evidence that disinflation is sustainable before he would cut the Fed funds rate target, analysts at Macquarie said in a note. Now, the second one is Bank of Japan, which today's Bank of Japan meeting could be one of the most consequential in years, with officials set to decide whether to end 8 years of negative interest rates in what would mark a landmark shift away from its huge stimulus program. Japan's Nikkei newspaper reported Saturday that the Bank of Japan is expected to end its negative interest rate policy this week after the country's biggest companies agreed with labor unions to raise wages by the largest amount in 33 years in annual wage negotiations. The Bank of Japan began coordinating both within the outside of the bank Friday on ending its negative interest rate policy, the report said. With an end to negative rates seen as nearly a done deal, the market's attention is shifting to any clues that the Bank of Japan could give on pace of any interest rate hikes thereafter. And then the third one is Bank of England. The Bank of England will likely play for time in Thursday's rate announcements as it awaits greater clarity on wage growth, which remains stronger than the United States or the Eurozone. Markets are currently expecting the Bank of England to start cutting borrowing costs from 5.25%, the highest since 2008, in August, after both the Fed and the European Central Bank. Investors will be on the lookout for any change in the language about putting the Bank of England's bank rate under review, and any shift in the balance of votes after February's three-way split. and Wednesday's inflation reading could cause a last-minute rethink. Now, number 4 is NVIDIA Developer Conference. Now, the NVIDIA, which we haven't really talked much about other than earlier, but this is going to be really nice. So the NVIDIA GTC Developer Conference, due to get underway on Monday, will be watched closely for the AI-related announcements, with investors undoubtedly keen to hear announcements that will sustain the mammoth rally in its stock. And so this is going to provide a lot of volatility for Monday, for not only NVIDIA, but most likely other semiconductors like AMD. And then we have the CEO, Jensen Huang, will deliver the keynote address and may offer attendees a first look at the newest products, including its next generation B100 GPU for the artificial intelligence and high performance computing applications. NVIDIA's gains for the year to date have already added $1 trillion to the company's market valuation, catapulting it into a position as the top performing stock in the S&P 500. But the stock has seen some volatility since a record high close on March 7th, meaning where we've seen it kind of plunge a lot lately too. Now, number 5, which is oil prices, which again, we've talked a lot about energy and how technology is starting to downtrend and energy prices are starting to kind of come up. But oil prices did dip a little bit on Friday, a day after topping $85 a barrel for the first time since November. But prices finished more than 3% higher for the week on rising demand from the United States refiners completing planned overhauls. In the coming week, energy traders will be looking to Wednesday's Fed meeting as cuts in interest rates are seen as an opportunity for demand growth in the United States. Oil prices were boosted after the International Energy Agency on Thursday raised its view on 2024 oil demand for a 4th time since November, as the Houthi attacks have disrupted Red Sea shipping. Plus, wasn't there companies that also decided not to do or ship oil or whatnot to, I think, Israel or somewhere in that area due to the whole Gaza thing or whatever? So I think there's some issues with that where I think we're starting to I forgot, like, sanction that whole dilemma. So, but the gains came despite the United States dollar strengthening as its fastest pace in 8 weeks. A stronger dollar makes crude more expensive for users of other currencies. And so this is just very, very good information that we always want to take a look at when we're doing our due diligence. Now, one of the last bit of things that's important that we do is to look at stock options activity. Now, even if you're not into stock options, it's still very important to look at, because it's still part of like our radar. Stock options, we have what's called call and puts. A call is where somebody bets a stock goes up. A put is when you bet against the stock, betting it goes down. And if it goes down, your account goes up. So this is huge. Plus, we have these call and put percentage ratios. That way we can see, are people betting more that the stock's going to go up, or they're betting more that the stock's going to go down. So when we're looking at this, most active stock options, it's like our radar. So we know what's normally here and what's not normally here. And normally, we'll see stocks like Tesla, Nvidia, Apple, AMD, Microsoft, Amazon, Meta, Google, and whatnot. But there's a few that we may not see as often, like Coinbase. We don't normally see it on here as often. But as we see more activity with cryptocurrency, we'll see more activity with these cryptocurrency applications like Coinbase and Robinhood. But we'll also see some other ones like SoundHound AI. especially if we getting more talking about more AI and microchips and stuff, we'll see more of these on here. There's Pfizer's, which is not normally on this list. We're starting to see that it is based off the volume, even though it was down only 0.5%. But for some reason, we have a 75% call ratio. So people are betting that Pfizer is going to go up, and it could be a short period of time. It could be a long period of time. We can determine that by kind of diving into it a little bit more. But it's still, like I said, really important that we know kind of what's going on with this with this part of the stock market. So starting from the top, we got Tesla, which is usually always number one at 2.4 million in options volume. That is a lot. Where Nvidia is just under 2 million, which is still a lot. Though Tesla is almost about a 50-50 call and put ratio. So this is where a lot of people like to straddle, or they'll just day trade it in either direction. And so Nvidia, we got a 60% call ratio. So people are pretty, pretty bullish, a little bullish going into Monday when it comes to Nvidia. And so even though it closed out, just down 0.1%, really not much, but people are more bullish than they are bearish going into Monday. And normally Apple's about the same, but for some reason they're at 68% call ratio. So investors are very bullish with Apple going into this next week. And then AMD 58%. They're following right. It's almost the same as Nvidia, but AMD was up 2%. Then we have Microsoft, 65% call ratio. Amazon's at 70% ratio. Normally average, we should see right around 60%, 65%, just like the earnings. And so, so we are starting to see some that are a little above that. These were down, so a lot of investors are like, oh, it's got to come up, Monday. And so, but you can also use this as a guide to maybe straddles. You don't always have to go 50-50 straddling. You can follow this also as a guide and maybe go 70% calls, 30% puts, and so that's always a good way to ensure your strategy. And so then we have the Palantir Technologies. We have about almost 64% call ratio on that. That was down almost 4% on Friday. Meta was down 1.5%, but we got a 56% call ratio, so that looks pretty good. We have the Marathon Digital Holdings. I think Dave was talking about that earlier in the meeting before we were kind of getting that ready. They were up 6%. And so, but I think they're related to the cryptocurrency industry. So 68% call ratio, that's really, really good. And so we'll continue to keep that one on our watch list. And then Google 70% call ratio going into this week, but they were down 1.3% on Friday. Coinbase doing good. We have almost a 50-50 call and put ratio on that one. So it's almost like we're waiting. And Coinbase is pretty high. I mean, that's a $242 share price. That's definitely up there. Adobe, I don't think they did very well with their earnings. I think they had earnings last week. They're down 13%, but we almost got a 50-50 call put ratio. Normally with something like this, we can kind of see a little, maybe another day of downtrending, but I would definitely put this on our watch list because we should find, come Monday, maybe Tuesday, where we can find its bottom and get in there, and then take advantage of its recovery. And so, but we definitely want to watch that one. SoundHound, we've talked a little bit about that one. 79% call ratio, which holds the highest call ratio than any other ratio on here. And so, and they're up, $8.91, and there's probably a lot more to go. Especially, talking AI, this is probably one of the least expensive ones out there that's pretty reputable. Talked a little bit about Pfizer earlier. Then we have this super microcomputer, almost $1,000. When we start seeing things like that get pretty, overpriced, we could start seeing splits where they could do like a 5-way split or something, which would put it at, a couple $100 a share, but to be determined. But that's something that we could easily anticipate here in a very short amount of time. But even though they were down 5%, I think they're probably well overpriced, but a split can really help save their overall market cap by making their stock more affordable. And so, but we do have almost a 60% call ratio over 40% put ratio. So that looks pretty good. And we have the SoFi Technologies, and they're at about $7. But we have almost a 58% call ratio. Then we have Intel. Now, I've been doing this for quite a long time, and I've seen and kind of always get this feeling where like I've had like for example, AMD was like $20, $25, $30, and we were getting closer and closer to the remodel of like the Xbox and the PlayStation, because they normally change their consoles about every 8 years, and so we were getting close to that, and I was like, AMD is a very good semiconductor for graphics, and they're very affordable. It's like I'm pretty sure that Microsoft and Sony are going to appoint AMD for their semiconductors, and then they did, and all of a sudden we started seeing the AMD stock going from $20 to $40 and $80, $100, and so on. It was very it was underappreciated. And so, but we can now tell that Intel is kind of the same way. We see all these other semiconductors companies that are doing phenomenal, but Intel is just kind of nonchalantly kind of flying under the radar. Well, they're on the radar now, and they're just kind of on, hard to see maybe because they're on the bottom of the list. But do not underestimate this stock, because I'm pretty sure that this stock will eventually reach that $80, $100 area, just like all the rest of them. They're going to get in that triple digit dollar amount. So just be ready, as well as other investors are starting to kind of see the same thing as well. We have nearly a 58% call ratio and a 42% put ratio. And so then we have Boeing. Boeing has been getting a lot of bad news lately. And so even though they were up a little bit, they suffered a lot throughout the week, but investors are still bearish with Boeing. We have a 58% put ratio over almost a 42% call ratio. So very, very bearish on that one. And so and then we have some other ones like Rivian, which is a very I think they missed their earnings last week, but so we're starting to see a little bit of a recovery on these. Now we're starting to see a 60% call ratio and a 40% put ratio. So let's take a look at the most active individual calls and puts to kind of see what is currently active going into this next week. Now I'm going to avoid anything that's expired. So any old expiration dates or DTE, which is the number of days until the option expires. If it says 0, we're going to ignore it. Because when we're doing our due diligence on this during the week, these are no longer valid. So we want to focus on the ones that are. And so because these are basically the ones that are still current and most active. So out of the entire option system, this is a $170 call strike price that expires this March 22nd, which is Friday, or basically a few days from now. Had only a 13,000 in open interest, and now it has about 79,000 in volume. Now, if you're new to options, open interest is basically the total number of open contracts for the previous day that have been traded but not yet liquidated via offsetting trades, meaning it was previously purchased but it has not been sold. People are still holding it, and that's why they call it open interest. It's showing how people are still interested in it because they're still holding on to it. And so when you see that, and then you see the volume that well exceeds the open interest, that just means there's a lot more interest, which will then accumulate during the next trading day. Because volume, which is only the current buying and selling activity, resets itself back to zero on the next trading day. So the open interest will accumulate those that are continuing to hold. So that number can come up, it can come down, but the higher it goes, the more interest and more people are buying this particular stock because they absolutely believe and betting that it's going to go in that particular direction. So, but going into Monday, it looks like, people our investors are more bullish with Tesla than they are bearish, because we do see a $160 put strike price for Tesla with the same expiration date, but this one has about 54,000 in volume versus the other one had almost 80,000. So that's a big difference. And so, but then we see this other one here, Apple. We have a $195 call strike price for Apple, even though Apple's right around $172. But this expires in the middle of August 16th, or approximately 153 days from now. Only had about 4,000 in open interest, but now it's got 56,000 in fresh volume, which is only it's going to merge. It's going to accumulate as we open on Monday. And so, but Apple usually tends to have their reveals, during that time, revealing their new iPhone and other technology. Though they did announce that they did decide to discontinue their EV project, which cost them billions of dollars. But sometimes bad news is good news, and so that loss of revenue won't no longer continue, and it will allow the company to become a more profitable company. But they could have they could have hurt themselves too in the long run, because offering this an EV, which is something they've never done before, is just a whole new product. And so it would have just been a huge success, and it's very disappointing that they decided to do that, because the phones are expensive and people are just holding on to their phones longer and longer. And so I just don't see how they're going to continue being a profitable company and finding ways to generate more and more revenue, other than increasing maybe their Apple TV Plus service. But and then continue going down the list. Let's take a look at, so we see a Pfizer here, which is currently at $27.94. We see a call strike price that's in the money at $27 that expires this Friday. But we see an open interest of 40,000 and a volume of 50,000. So again, it does exceed the open interest, which shows more buying activity. If it was less than the open interest, it's always questionable whether they maybe sold what they had. But if it's more than the open interest, it's definitely that they bought, because it exceeds. And so and then there's another Tesla call, $165 one, same expiration date. There's an Apple call with a much shorter expiration date for this Friday, on the 22nd. And so that looks good. We've got a very good amount of volume there. There's another Apple call. So investors are definitely bullish for Apple, and mostly bullish for Tesla as well. So these are very, very popular. So here's a trick. So if we click on open interest, it'll sort just this page for the open interest, but if you click on refresh, now it'll refresh the entire system's stock options sorted out by open interest. And so this way we can see what everyone is holding. And so again, even if you're not into stock options, this is still extremely important, and you need to be using this no matter what. Because what we're seeing is, for example, and this is not just an example, this is a live example. And so PayPal is on the top of the list with the highest open interest. Now PayPal, when I've been talking about this several weeks ago, is right around $55 or so, and I was trying to alert everyone that PayPal is changing. They have a new CEO. The CEO wanted to do this little reveal thing, revealing more stuff about PayPal, of what they have planned in the pipeline. And so then all of a sudden, well, even before that, we started seeing this $140 call strike price that expires in less than a year, next January 17th of 2025. So even if you bought this as a share, and it goes from $60 to $140 or even $120, you just doubled your investment. And you're holding it as a share rather than as a contract. And I mean, if you were holding it as a contract and it got to that, especially in a shorter period of time, not only will you'll double, but you could easily quadruple what you put into this. but it's important that we monitor this every day to ensure that nobody's selling, because as soon as this open interest drops, then that means, okay, they just sold, we need to do the same thing. Always follow the money, and that is what the pro and the expert traders say. That's what we say, that's what we do. This is all part of following the money, seeing where it's going. That way we're always aware of what's happening, as well as knowing what's going to happen before it happens. So the next one is the SoFi. SOFI is currently at $7.03. We have a $15 call strike price with the same expiration next year, January 17th, or approximately 307 days from now. Has 155,000 in open interest. And on Friday had an additional 4,000 in volume that's just accumulating on top of that. So if it goes from $7 to even $14, you just again doubled your investment just by holding shares. And then the next one is the VOD. I can't remember what VOD is. Vodafone Group or something or other. I'm not familiar with them. But again, they're not normally on this list, and so there's something special going on with this stock that we got to do a little bit of research to figure out why is this stock on this list. And that's currently at $8.82 with a $10 call strike price that expires this April 19th, or approximately 34 days from now. So investors are betting that VOD is going to rise like 12% here in a month. And we see a lot of fresh volume. In fact, out of this whole page, 17,000 is the most volume on this page, though it does have 138,000 in open interest, which is third place on this page, is showing a lot of unusual buying activity. And this is something we got to definitely add to our watch list and do a little bit more homework on to figure out why is it on this list and why are investors betting that it's going to go there. And once it does, will it find a new strike price and other goals and things like that. So there's another SoFi one, or SoFi, same expiration date, different strike price. We have a $10 strike price instead of a $15, and so that will, but if you combined the open interest, it really would be like the number one, because now that would exceed the PayPal. So that's one way to kind of think of it. You just combine the two that are in here and then kind of compare. And SoFi is very, investors are very interested in this one, and we need to figure out why as part of our homework and due diligence. But then there is another PayPal here with a $145 call strike price. And so it also has 99,000 open interest and a decent amount of volume that's just only accumulating. Then we have Vail, which is just under $12 a share, but with a $15 strike price that expires this January 20th of this year. 92,000, almost 93,000 open interest, very, very quite a bit for that one, because again, it's not normally on this list. And then we have Ford Motor Company, which is currently at $12 a share. But we have a put strike price of $9.82, which is very odd and unusual strike prices this one has. But investors are betting against it. Like it basically has more decline to go, and they're suffering a little bit. The whole most of the domestic automotive industry is still suffering from the automotive the union parts workers strike, and so as there's a shortage in new vehicles, they're not as profitable. These companies are not as profitable as much anymore, especially as they're lowering their MSRP prices, which we've never seen before. I mean, we've been seeing Elon Musk lower his EV prices only to try to fit it within the government's guidelines for some of the EV tax credits to making it more affordable, to help increase his sales and delivery reports. But also it creates this chain reaction. Whatever he does, now all of a sudden these other EV companies start doing the same. But now all of a sudden we're starting to see the gas combustion vehicle prices, MSRPs, are starting to be reduced. And so normally in the past, what we would see is they would just increase the rebates. But in this case, the rebates are kind of staying the same, but they're lowering the MSRP prices, thinking that might make a difference in that industry. But Ford Motor Company, though, has increased their sales and delivery in other parts of the world, especially South America. I mean, their sales are up, 10, 15, 20% in many countries. And so even if Ford Motor Company does go down to about $10, they're easily going to recover and go back up. Now, don't forget, Ford Motor Company is building a couple, mega factories around the United States to help build electric vehicles and manufacturing the batteries for these. And we've seen what building a mega factory does for Tesla. It only helps their sales and delivery reports that help manipulate investors and their stock. And so Ford has really learned quite a bit watching Elon Musk and Tesla, and it's gonna work. And we saw how Ford Motor Company reached $20 or $25 right before Russia invaded Ukraine. So it just kind of tests the water a little bit with its potential. If it can reach $25, it can easily reach $25 again. And so, but we always want to make sure Ford Motor Company is on our watch list. Then we have FCX. Was that FedEx? I can't. No, that's Freeport. And so, but it looks like we have a $45 call strike price, which is pretty much almost right there. So it's always nice to see a strike price that's quite a bit further away from the share price when we're looking at the most open interest stock options. So then we have Rivian. Check this out. So Rivian, which is currently at $11.04, we have a $7.50 put strike price that expires next year in January 17th, and so it's accumulating open interest more and more every day, as this was kind of on the bottom of the list earlier last week. It's now starting to trickle up the list. Now we have the Robinhood app, which is currently $18 a share. Now, not that long ago, it was right around $12, $13 a share, and anytime as we get closer and closer into the bull cycle of the bull market of the cryptocurrency cycle, that's when we're going to start seeing a lot of this type of activity with the cryptocurrency platforms. And so, I'll usually create a lot of different posts and stuff, giving us a lot of clues that this is where it's going to head. And I had posted a clue in our group months ago that I personally have a prediction that it's going to reach $20 in a very short period of time. And lately I've been using that little Elon Musk a picture of him holding a little piece of paper, and I'll just stamp a little price on there and the ticker, and well, it's almost there. Give it a little bit more time, and it'll definitely be at $20. Once it reaches $20, then stock options investors will kind of reevaluate the next strike price. And so we could see $25, $30, or whatever, to be determined. But once it gets there, we'll take another look at it. So that's doing good. It's doing exactly what it's supposed to be doing. And then we have CPNG. I'm not too familiar with that one. Coupang, I'm not sure, but what that one is, but it's currently at $18.13. We have a $22.50 call strike price that expires this May 17th. It is accumulating a good amount of open interest along with some volume there. Then we have Bank of America? Yeah, Bank of America is BAC, which is currently at $35.41. We have a $28 put strike price on this guy, and that expires next June 21st. And so and that's what's interesting is especially with this whole interest rate thing, as more and more automotive industries are trying to find creative ways to find people to buy their vehicles, they're lowering their own interest rates back down to 1.9%, 2.9%, 3%. And these are percentages that no bank can't compete, whether it be your local credit union or one of these major national banks. They may be able to do 5.9 or 6.9, but most of your credit unions are advertising right now as low as 7.99, and that's for some stellar credit. And so, but if more and more people are financing through the manufacturers rather than a lender like these, it's only going to hurt them. And so as we get more diving into more financial earnings throughout the year, we're going to start seeing that. And so investors are already betting against Bank of America that's what's going to happen. So then we have the Sirius XM silent radio at $4.05 a share. But we do have a $4.50 put strike price, which is already exceeded that. Oh, that's already expired. So that's DTE is 0. So that is done. Now Apple, take a look at this. So Apple, which is again currently at $172 a share, we have a $250 call strike price that expires this January. It's like, why? How? What don't we know? Is this inside information? Does somebody know something we don't? How can it just get from 170? And with even where Apple is right now, that's still really, really high. I mean, not that long ago, I think it barely touched 190, 200 or whatever. But now they're saying, oh, it's going to exceed that. Will they surprise us? Will they surprise us with some new technology this summer, or will they actually reveal their EV car and say, oh, we're just kidding about discontinuing it? Who knows? But this is very interesting to see that people are already betting that Apple is going to do some pretty go some pretty cool places here. Now Amazon, which is also right around $174 a share, but we have a $215 call strike price that expires in 62 days from now on May 17th. So it has a very good amount, a decent amount of open interest and active volume. We have another Sirius satellite radio there. That's already in the money with a put. And then we have, I think that's Wells Fargo, WFC. Let me double check on that one. Yeah, Wells Fargo, another bank on the list. Though Wells Fargo, which is currently at $57 a share, we have a $60 call strike price that expires a month from now on April 19th, which also has a decent amount of open interest and volume. We have American Airlines, which Boeing has been kind of on the news lately, as well as American Airlines. I think was one of the most recent news about that little panel thing that came off. the planes. These planes are just falling apart. It just seems like, and that's just not good for these stocks. And American Airlines, which is just under $14 a share, we have a $12 put strike price betting against the stock that expires this January 19th, so almost a year from now. And there's a few other ones that you guys can also kind of take a look at, but there's always some great information here that we can always take a look at. But hopefully this meeting has helped you guys out a lot. If you guys have any other questions, feel free to look me up online. Anybody have any questions, anything that you guys wanted to go over now before we end our meeting?
Yes, just a quick question.
Sure.
Carlos. First of all, thank you for the information. Very helpful. I'm on bar chart website here. Can you tell me how you sorted your information again?
Absolutely, and it's the same way using the mobile application. It's the user interface is a little different. So, but let me go straight to investing.com website. That way we kind of find this stuff together. So so on the top of the page you should see economic calendar, and so it's kind of the most common seeing pages. So once we're at the economic calendar part of the app or the website, there should be a little, well, on the website there's a word filters, but on the app it looks like a little funnel icon, and so you want to click on that funnel icon or the word filters, and you want to clear everything because there's going to be a bunch of stuff in there. It's all gibberish. Clear everything because there's only two things we need to see, and the first one is the United States, so you put a check mark under the United States, and then you'll see importance with a 1 star, 2 stars, and a 3 stars. We want to put a check mark under 3 stars. That way we have 3 stars, United States, and this tells the system to pull everything that has the biggest impact on the United States stock market. And it's interesting. And then go to this week, or you can go to particular days or whatever, but just know that it also changes as we look into this, every day. It adds the results, or maybe it adds forecasts and other information. And but it's just so neat. And I remember when I was new day trading that all of a sudden I'd see news come out, and all of a sudden the market would react to something. All of a sudden the market would surge or it would plunge, and then after 5, 10, 15 minutes I started getting these news alerts from like MSNBC or whatever, Yahoo Finance, Bloomberg, whatever, talking about certain things, and I'm just like, oh, okay, well, you just kind of but I didn't know that these things were scheduled to happen. And so, but by kind of doing more and more research on different platforms and stuff, a lot of things just didn't provide enough information, or maybe it wasn't user friendly enough. But once you get this dialed down, whether it be the website or the app, it's completely user friendly. It makes more and more sense. But even though it may be new to you with these economic reports, feel free to click on them, because each one will provide a small paragraph that lets you know more about the economic report right here that I've highlighted. Like, for example, the Energy Information Administration's crude oil inventories measures the weekly change in the number of barrels of commercial crude oil held by the U.S. firms. The level of inventories influences the price of the petroleum products, which can have an impact on inflation. Now, below shows how it will affect the stock market. So, for example, if the increase in crude oil inventories is more than expected, it implies weaker demand and is bearish for the crude prices. The same can be said if a decline in inventories is less than expected. If the increase in crude is less than expected, it implies greater demand and is bullish for the crude prices. The same can be said if a decline in inventories is more than expected. Now, the only time that this could be could provide the opposite effect is if we need the opposite results. Which when we're like a year or so when we're fighting inflation, we needed the economy to do bad, which sounds kind of weird, but if the economy did bad, then that means that we can start focusing on lowering interest rates and moving on and stuff. And so but this is how you can really learn more and more about these economic reports and how it will affect the stock market. That way you're always aware of what's going to happen before it happens, and you can plan your trades accordingly.
Okay, and then what about the bar charts website with the options? What was your sorting there?
So with the barchart.com website, if you click on the options tab, a menu will appear. There's pretty much two main areas you want to save and to focus on. You can venture off into other areas and learn, but there's two main primaries that are like your Bible, and that's going to be the most active options. Now, the most active options will begin to populate itself after the stock market opens. Usually about every 15 minutes it'll update its list, though the prices update every second. So that way we kind of also use it as a radar of what the stock options world is doing and what call and puts ratio. But that only shows the overall system. It doesn't show the individual calls and puts, and that's where we want to go into the right here, option volume leaders. So if we click on option volume leaders, that's basically the most active individual calls and puts, but it sorts it out by volume, but it sorts it out by the whole entire system by volume. And so this is where we can see what people are currently trading. But normally when you're looking at on that page, you'll see a very short period of interest, not interest, but expiration dates, meaning where we'll see a lot of 1 week expiration dates, 2 week expiration dates. We don't usually see like over a month or something unless we get into the open interest part. Now if we click on open interest once, we just click on it once, it just sorts out the page here by the highest open interest. But we want to see more, because bar chart, they're going to want you to try to pay for their service to try to get more information, but a little trick, a little hack is we can click refresh after we've clicked the open interest once. If we click refresh, now it refreshes the entire system by the highest open interest. Now we have the information that we need, and with the highest open interest, now this does show the much longer expiration dates. So it just depends on your strategy of what you're doing. If you're into a stock options, longer expiration dates are going to be a little bit more expensive, but they're going to provide a lot less volatility. So they're not going to move a lot when the stock moves. Unlike a shorter expiration date, it was a lot more volatile. Just a tiny little a stock movement can be a huge movement in the stock options world. So or you can use this to buy shares. Like I said, we talked about the PayPal, the SoFi, and many others that people are betting that these stocks are going to double in a year. You can easily buy shares, don't even have to worry about the whole options thing, and use part of that thing where we always follow the money. Invest where other people are investing. Kind of like Nancy Pelosi. People are always, you just got to follow him or her and her husband, and because with the inside trading or whatever that they anticipate, whatever they invest in is usually ends up working out. So that's the same thing. It's another source of always follow the money. You're following, but in this case, we're following a majority of investors of where they're putting their money, rather than a very wealthy person or two. And the majority always wins, and so that's why we always want to look at this as our radar. Primarily, just those two pages.
Very good. Very good. Thank you, sir.
Absolutely. And, just like Dave said, we want to try to do this more and more every week. We used to do this on a weekly basis, but we just kept jumping around different platforms using Zoom, but not everybody else was able to use Zoom. Facebook, I had their Facebook develop certain, streaming platforms, but they started letting go like 7,000 of their employees, and it just happened to be they let go of the department that was working on our live streaming, features. So this is the first time we're using the Discord, so it's just kind of trial and error thing. So hopefully we'll just continue during our stock market meetings every Sunday right around this time. And yeah, it usually takes about usually they last a couple of hours, but you know there's just a lot to go over. You know, throughout the week, and that's why this is recorded. I'll upload this to our YouTube channel. That way we can always kind of look into it. We can always watch it again later on if you wanted to compare. Or if you missed something, you can always rewatch it. And so it's pretty neat. So, but it's important. You know, just like any other company or industry, you know, they go over meetings. You know, it's just one of the important things for us to always plan, you know, our trade, so we can trade our plan, because if we fail to plan, we're planning to fail, and that's not us. So thank you guys very much. I will be in our chat rooms. If you guys have any questions, you can hit me up. And then other than that, good luck. And then we have our live trading thing here, so that way we can always go live tomorrow and do some trading together.